Hey there, pro traders, and welcome to the Monday Market Review with yours truly, Ian Giffen, on behalf of GoPro Trading Academy. And folks, I hope you had as good a week trading last week as we did. Really easy trading conditions by comparison to what we've had to deal with, certainly late last year and the early parts of this year. So it's really nice when things do turn around and it becomes relatively effortless to turn a profit and yeah, we just have a much higher proportion of winning trades. It's always very satisfactory. All right, so I also hope that you folks are looking forward to the launch of the new intraday strategy. Last week was, without a shadow of a doubt, the best week we've had in our testing for the strategy so far. So all things are still very much on track for our launch. So as always, if you want to make sure that you are notified when we're going to be doing the training on the new strategy, make sure that you do subscribe to the channel and hit that notifications bell. So that way you won't miss out. We are going to be doing a workshop to launch it, so you do want to be there. Right, so that being said, let's have a look at the charts. I'd say the overall theme for last week, without it being too difficult to decide on that, was the dollar strength, of course. So after some time of the market going sideways across many of the USD pairs, the majors and the minors, the last few weeks have been had a nice directional bias, and that dollar strength just picked up speed last week. So again, that really made it quite easy for us to trade many of those pairs. So here on the weekly time frame, on the Euro USD, you can see a very strong bearish impulse candle. We mentioned a week ago that with that high test in the lower close, that sort of inverted hammer, we were looking to trade a daily impulse, and of course that trade was taken first thing Monday. I think we did mention that, and it went, if you use standard targeting, that went pretty much straight to profit the following day. If you're using advanced targeting on this, then you're still in the trade, so that's working out quite nicely. And of course you could see that gave us the opportunity as well to trade some H4 impulse trades. You'll notice that this trader had used advanced targeting for a single H4 impulse, whereas if you'd use standard targeting, you would have had 3 trades, in fact, 2 winners, with the third one being taken out for about a 0.8 loss. So all in all, though, a nice result on that. So what about cable? Moving on. Again, you can see here, we mentioned this last week that we'd already had a strong indication of being in a bearish impulse wave. Well, certainly that did transpire last week with another strong bearish impulse candle on the weekly time frame. And unfortunately, though, apart from that initial setup, which we obviously got into, or the daily impulse, and that too went straight to take profit, there hasn't been anything else. And again, if you're using advanced targeting on that, you'll still be in that trade. And of course, that also gave some nice possibilities for H4 impulse trades. And you can see again, this trader took one there. They were just taken out on the trailing stop using the 3-6 rule over there. But ultimately, I don't think it would have made any difference. So all's well that ends well on that one. And as you can see, I mean, this is really pretty straightforward when it comes to our trading conditions. Right, here we are on the USD JPY. Now, we've had yen weakness before, and what's really happened now is that the dollar strength has taken over to give us yet another bullish impulse candle on this pair, on this time frame on weekly, and that adds yet another to the count of 1, 2, 3, 4, 5, 6, 7 out of 8 impulse candles over the last 8 weeks. So that's pretty impressive, pretty strong movement. And of course, that meant that conditions were stacking up for a bullish daily impulse. We got the setup, what was that, on a close of play Wednesday, took it on Thursday morning, and went straight to the take profit for the standard targeting. Otherwise, as with the others, you'll still be in this trade looking to trail your stop. So that's pretty straightforward. Because we were sitting in a retracement for a lot of last week, there wasn't as much in the way of H4 impulse opportunities. But of course, on Thursday, you would have been able to look at that, and Friday, in fact. But I don't think there were any. Yeah, you see, this is the issue where you you just get a continued move. So if you were looking at that, then you would have had a straightforward move all the way up without any pullback, giving you an opportunity for an H4 impulse. The retracement that we had through the course of Friday, leading up to this morning, of course, did set us up for a class 1 W pattern. And if you were looking for that, then potentially you would have taken a trade first thing this morning. Just looking at it from our point of view, I don't like to take a trade and we've got a bearish candle as an inside bar in a bullish trend. So I think we stayed away from that one. But it wouldn't be a terrible trade, though, had you done that first thing this morning. And the other thing, of course, is waiting for liquidity to come into the market. Monday mornings aren't the best time. Dollar Swiss, also here again, dollar strength very clear on the weekly time frame. Another bullish impulse candle outside of our HTC channel. So no valid pattern, but definitely tradable. And here is the daily time frame where, again, it really has just been going straight up. So as we saw just now with the H4 impulse on dollar yen, here we haven't had the opportunity for a daily impulse because there hasn't been any kind of a pullback. So certainly not enough here either. Remember, an inside bar just gives us the 1 point and we need 2. But if you drop down to the H4 time frame, plenty of opportunity. And again, this trader had a very nice H4 impulse using the advanced targeting. That's a pretty decent win. What did they get on this one? So it's 28, 30 pips up to 120. So definitely at least a 4-to-1 reward to risk ratio on that. So nothing wrong. Again, these are conditions that are really ideal for these core strategies of ours. USD CAD, not so much. We're inside the channel, so not looking there at all. But if you drop down to the daily time frame, we spent the whole of last week outside of the HTC channel. So certainly tradable. But then looking at Wednesday and Thursday, where we had these bearish candles, I think that started putting a bit of a damper on things. Friday, of course, being quite an interesting day, looks like that low will be ringed. So that bearish phase 2 or retracement wave potentially coming to an end as at the end of today. And if you are looking for a hybrid, let's have a quick look. So quite an aggressive change in cyclicity. So no setup yet for a hybrid over here at all, unfortunately. H4 impulse, you would have been able to take a trade in there. And although it was scrappy, a standard target you would have hit. Advanced targeting, you would have had a small win. So not as impressive as many of the others. And also, remember, you've got to be careful about how much exposure you have to any one currency. Right, Aussie, here again, dollar strength showing itself with 3 bearish impulse candles in a row on the weekly time frame inside the channel. So we're not looking for daily impulse trades, but we are looking, of course, at the daily time frame as a selection time frame with a very strong bearish move throughout the course of last week. And looks like we're getting a bit of a bearish resumption potentially today as well. So looking at this over here, there was a very nice setup for a hybrid using the class 3 hybrid over here, and that obviously did extremely well. That was a very profitable trade, and ultimately I think it survived even this 1, 2, 3, 4, 5, 6. No, it actually would have gotten stopped out around here. So yeah, that would have been pretty much that. But if you were looking to trade, obviously using the H4 impulse, that's 1, 2. You may well have gotten the trade over here using the ATR stop. You would have survived that, but you would have been stopped out for about a break-even trade here. So a bit scrappy, unfortunately, through the latter part of last week, where we did have a bit of a pullback across the board. The last of our majors and minors being the Kiwi, of course, similar kind of picture, even more bearish, in fact. So just looking quickly at weekly, we have now got a bearish breakout. So at the start of this week, we've been looking for a pullback and then the opportunity to go short. So the irony is, unlike the Aussie on Friday, we didn't get a higher high with that candle. So if you're going to treat that as a pullback, it's only 1 point rather than 2. But if you get a bearish impulse candle, you may be tempted to go for that. Looking at H4 impulse, again, through the course of last week, There was another potential. Yes, we didn't get the final setup over here for a hybrid. We didn't take it because of that extended bar, but we did get it on the Aussie. But we did get some nicer setups for H4 impulse. And if you'd taken the trade around here for H4 impulse, that would have been a very nice winner for you as well. Right, so looking now at our yen crosses, Euro yen, last week was a pullback week. So now that we've dispensed with the dollar strength, things are not quite as impressive. So not really much for us to have done last week. Not only have we seen that high now ringed by last week's candle, bringing that bullish impulse wave to a definite end, but even on the daily time frame, as we discussed a week ago, we'd already were seeing the pullback into the channel, and also the potential for a class 1W pattern being violated when that happened on the way back on the 25th. So what was that? That was Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, so all the way on Monday already, close of Monday, pulled back inside. Excuse me, we haven't really looked at doing anything with that since. All right, just grabbing a sip of water here. All right, so looking onto the GBP yen, twisted sister as it's called. Eventually, we'll get there. Try again. And same kind of picture. So that's the weekly time frame. Look, this is still very much a bullish trend, potential trend still, because we don't have intact cyclicity outside of that HTC channel. But there's no reason for us at this stage to think that this bullish trend is over, but we are in a retracement wave, a bearish retracement of that trend. Here on daily, again, you can see we haven't been able to touch this, but of course, if we do get a resumption in bullish cyclicity here, that would indicate a resumption of the next impulse wave on the weekly trend. Another interesting thing to note, again, I do point it out when we see it, is how well the lower time frame 55 EMA acts as a dynamic level of support and resistance. In this case, looks like it may well have brought the that bearish retracement wave or phase two to an end, but time will tell. Let's wait and see what happens with the cyclicity on this one. Not tradable at this stage in any case. So Swiss yen, weekly time frame, same picture, of course, dropping down to daily, all very similar, not really tradable for us, and we don't yet see any bullish cyclicity establishing itself, so we can't really touch these at all. For those of you trading the overlay, you may well have grabbed some of these or a bearish overlay on the daily time frame for your execution on some of these. So yeah, CAD yen, similar kind of picture, and yeah, that's there you can see on the daily time frame as well. Early last week, pulling back inside of our channel, not being able to do anything with that. And it also invalidated itself as a potential class 1 pattern. It's still a class 2W pattern at this stage, despite Friday's inside bar. Let's see what happens today. We might have this high ringed here, in which case this, any chance of bullish cyclicity at this point in time is over. The other thing to note, though, is that we are outside of the channel. This is a bullish trend, albeit weak, because it is a class 2W pattern, and that, of course, is a bullish trending pattern, albeit a weak one. So if you were looking for a continuation of this on the lower time frame, you might be looking for the to trade H4 impulse. But again, you can see that there's really nothing happening here for us to do that as at the start of this week. So all very strong pullbacks, and that bearish inside candle on Friday not boding well either. Aussie yen, same picture again, broadly speaking, on the weekly time frame, still a trend, still a bullish trend, just in a retracement wave of that trend. On the daily time frame, you can see how that retracement so far has respected the area of support at the bottom of our HTC channel on this time frame. So it's containing it at this point in time. And again, if we see a resumption in bullish cyclicity here, that could well be the signal that we've got a bullish resumption on the weekly trend. But again, at the moment, nothing for us to do. Last of the yen crosses, almost carbon copy, slightly more bearish. but that's about it. And that extra bearishness showing itself here as a bearish breakout on the daily time frame, being able to break through that support level at the bottom of our HTC channel. So this is now obviously a class 2M pattern as of this morning. I beg your pardon, it's actually class 1M pattern as of this morning. So for folks who are trading these on the selection time frame, of course, you would have dropped down to the lower time frame and be looking to short this here on H4. But we just missed that opportunity, and the market really is just going sideways at the moment. So it hasn't really given you any chance of shorting this at the moment. So yeah, nothing doing there, unfortunately. Okay, so that's it for the yen crosses. Moving into even less interesting territory, I'm just going to flip through these quite quickly. Euro GBP and Euro Swiss, we're really not interested in these at all on any of the time frames. Euro Cad, however, last week did give us a bearish candle. It is an engulfing candle, interestingly, which means that you can see some bouncing around here on the daily time frame. But the fact of the matter is, this bearish trend did continue on Thursday with a bearish breakout below that support level. Friday, it did retrace all the way back inside of that channel. So the opportunity to be able to do anything with this so far has been extremely limited. So if you're waiting for a class 1M pattern, unfortunately, you ain't going to get one because our close last week was inside that XA leg. So another one just to sit tight on, and but just keep an eye on it. Euro Aussie on the weekly, you can see this is really of no real interest to us. And last week's bullish movement, just testing the top of our HTC channel. For folks who recognize that this was a valid class 1W pattern, you might have been interested in looking at this morning after Friday's bullish engulfing impulse candle. But again, there's been very little for us to do. So remember, we still wait for a pullback. There has been a reversal in this bearish cyclicity. That is true. So that it is worth waiting to see if we get a bullish opportunity here. Wait, folks, just throat's taking a bit of strain at the moment. But right, so that's interesting. You know, with this breakdown and bearish cyclicity, it's in fact phase one. Looking at the first phase 2 now, bullish resumption bodes quite well for a potential breakout. Remember, we do have this resistance level smack bang in our sights, and the market has tested it throughout the course of last week, excluding only one day, and failed to break through. Right, Euro NZD, same thing except for that additional NZD weakness that we've seen, and that shows itself here with a more valid breakout, valid class 1W pattern, and with that low having been ringed already on at the close of play on Wednesday, you would have started looking on Thursday already to trade this instrument. So I'm not sure that we did, but it's worth having a look. I beg your pardon, on Friday you would have started looking because Thursday ringed that low, but it doesn't look like there was very much for us at all. Bullish breakout. Here's the pullback. Might have actually gone for it with this bullish impulse candle, in which case, fortunately, that would not have worked out. And folks, that is fairly typical of a Friday afternoon. So, however, if you had continued to look, you would have noticed that we had another setup on the H4 impulse this morning. But likewise, not a terribly happy trade at the moment, but a valid setup. So if you've taken that, then there's nothing wrong with that at all. That's how convexity works, folks. Right, GBP Swiss, just that inverted mirror image of the Euro GBP. So testing that support level again here on the weekly time frame. Nothing doing for us on this pair at all. Right, GBP CAD, tad more interesting. So we mentioned a week ago that we'd had that high ringed and that we were potentially looking now to use this as a setup time frame, which means that we're looking for daily impulse trades through the course of last week. Unfortunately, the market just went straight down. We didn't really get much of an opportunity. Some folks jumped in at the open of play on the 26th. That is fine. You had to use an ATR stop for that, but no problem with that. It's just a pity we didn't get a better setup. In any case, that was fine. If you had used your standard target on this, then you would have hit that already. If you're using the trailing stop, you're probably waiting for the threshold to be met, but you would and you should be at break even on this one already. So that's all well and good. Obviously, that did mean that as soon as we had that bearish breakout on the 25th, so from the 26th, you could also start looking for the H4 impulse trades. There was some interesting activity around about that time as well. I think we had one over here and got stopped out by that spike. So a bit of a messy pair. I think there was another trade somewhere in the vicinity over here, and that went on to hit the take profit. So one winner, one loser, and obviously the winners are bigger than the losers, so we really don't mind. Okay, that's Gbp Cad. Gbp Aussie, we haven't been looking at this, certainly on this time frame. As you can see, it's just a retracement wave, a bullish retracement. We finally, the market closed back inside the support level here, so definitely not a strong bearish trend anymore, showing some weakness. At best, we will get a class 2M pattern. And that was all because of Friday. As you can see, Friday's candle closing back outside of our HTC channel here on the daily time frame. So folks who are looking to trade this as your selection time frame, you drop down to H4 and look to see what you could do there, but there really hasn't been anything. Remember, you need to have that pullback first. So nothing yet today, and that's just also, again, fairly typical for a Monday. We've had some really good Mondays this year, but last Monday was not one of them, that's for sure. But the Monday before that was actually quite spectacular. All right, so GBP NZD weekly time frame, same kind of picture, but just that additional Kiwi weakness showing itself against relative to the Aussie. So yeah, we not really looking at this, of course, as a selection time frame, but you may well be doing the same thing here as you're doing on GBP AUD, looking for a setup to go long using H4 as your yeah, there was actually a setup over here for your execution time frame. So had you gone first thing this morning, it would have actually been 8 a.m. Another one of those trades, which is not terribly happy right now, but it's a valid trade. There's nothing wrong with that at all. So if you've taken that, nothing wrong, regardless of the outcome. All right, CAD Swiss on weekly, we are outside of the channel, and as we discussed previously, it has managed to stay outside of the XA leg, so it's a valid class 1W pattern. The only box not ticked here is outside C close, but nevertheless, it has been last week it was a valid pair for us to look to trade this with a daily impulse. So here we had a class 2W pattern and a setup last week for a daily impulse. Had you taken that? Unfortunately, it hasn't hit take profit, and it gapped in a bit of a bearish direction over the weekend, struggling with that resistance level. So you've trailed the stop already somewhat. You reduced your risk by about a third, but you just need to keep tabs on that one and, well, let the market do what it's going to do. Otherwise, we haven't touched that one. Aussie Swiss, likewise, no real interest to us. It's all bearish now. You know, we've had a breakdown in that bullish cyclicity and last week's candle ringing that high. So definitely bearish on that time frame. And on the daily time frame, you can see that led to a bit of a bearish breakout below the support level. But this it's really, really messy. So we've stayed far away from these pairs. Aussie Cad, similar picture, just more so. A couple of, well, 3 bearish impulse candles in a row. And you can see that there's additional strength here, bearish strength on the daily time frame. So we're not trading that, obviously, with the weekly time frame not suitable as a selection time frame. We're not using daily for execution, but we have been using daily potentially for selection time frame. But last week, as you can see, again, 1, 2, 3, 4, 5, there was very little that actually transpired. I think Monday was probably the best day we had. After that, it was really, really scrappy. So dropping down to the H4 time frame, I think this was a hybrid. Hybrid worked out quite well. Got stopped out over here on the 26th, I think it was. What's that? 26th. Yeah, early in the morning on the 26th. And had you taken an H4 impulse anywhere? Well, I mean, there were a few actually. So that was an H4 impulse with probably an ATR stop. There's another H4 impulse. So there was plenty of opportunity to short this on H4. And you would definitely have hit a take profit anywhere there without it being stopped out. So, and of course, if you used advanced targeting, you would have been stopped out in the same place as this hybrid. If you looked to go again with a class 3 M pattern, I personally don't, you would have shorted the market here. So that also ultimately, I think it just didn't work out thanks to this candle. Using the 3-6 rule, but it was almost at break even anyway. So also, as you can see, though, certainly pretty scrappy throughout the course of last week, with the exception of Monday and Friday. And nothing happening today, of course. Aussie Kiwi. So last week, you could see it ringed that high. So a pullback, a bearish retracement in this bullish trend. We may well be seeing an end of that phase 2. It really just came to an end with obviously this phase 1, phase 2, phase 2, and then a bearish phase 1. So if we are going to get a bullish resumption on the weekly time frame, we need to see bullish cyclicity establish itself here on the daily. But otherwise, there's really nothing for us to do. It is possible, given as we've seen, the fact that the Kiwi is significantly weaker at the moment than the Aussie. So we may well see that through the course of this week. So do keep an eye out. So speaking of the Kiwi, our last 2 Kiwi crosses, Kiwi Swiss here, you can see that it's showing weakness on the weekly time frame, but nothing useful as a selection time frame. But on the daily time frame, if you want to use that for selection, you may well have done that from, well, all the way, in fact, from Monday when we had Tuesday, I beg your pardon. Tuesday we had the breakout, and you may well have been looking to short this. I'm not really sure why you would have done that, though, with lots of other things on the table. But I don't think with this scrappy behavior that we had through the course of last week, much of that would have worked out for you. So not a great pair to have traded last week. And here on the Kiwi Cad, we've got a breakout now, obviously, on the weekly time frame. So through the course of this week, for those of you who are channel traders, because this is not a valid pattern, it's a class 3 pattern. But if you are only a channel trader, you may well be looking for the pullback on the weekly time frame, and then your final conditions met to short this. Otherwise, obviously, this has been tradable on the H4 impulse all the way since the 27th, which was Wednesday, and certainly on Thursday, Wednesday's candle having ringed that high. And of course, whilst we were in that bullish retracement, if you're a hybrid trader, you would have been looking there as well. And in fact, that's precisely what we did. This ended up just being, I think, a class 3 M pattern, and we shorted the market there. And I think on our account, this trader didn't take it, but on our account, we would still be in that trade using that 3-6 rule. Absolutely. So the stop currently sitting at that point there. So just above that. So yeah, had you done that, and obviously with the hybrid, we tend to look to use advanced targeting, then you would be in that. If you had taken this on H4 impulse, well, the only one that I can see is here. And again, that was late on Friday, so you may have avoided that. But had you taken it, likewise, your stop would be there. You'd still be in the trade. So not much happening today, but that doesn't mean it's going to stay like that. All right, so that's our currency pairs. Gold at the moment on weekly, as you can see, we've had 2 bearish impulse candles in a row. So gold weakening quite a bit after having just managed to get through that $2,000 point some time ago, a couple of months, but it's not showing that strength anymore. And of course, if this does carry on, we'll have a bearish impulse wave as well if it gets to close at the end of the week below that low. There's some way to go for that. Here on the daily time frame, however, you can see how we've already got a class 1 M pattern, and today certainly looks like it's going to ring that high at the end of today. So if you are using this to trade on using the hybrid, the unfortunate truth is that it hasn't really given you a chance to get in. We haven't had our final setup conditions. So gold can do that to us sometimes. It can have these long extended moves, and if it doesn't give us a setup, then that's just the way it is. But we've had plenty else to trade, and it'll be interesting to see what happens after this. Oil, sorry, we've not at oil yet. We're still now on our indices. Indices, as you know, have been coming down for the second week in a row. This is the Dow, not one I typically trade. I prefer to trade Nasdaq first, and as these tend to lag. But it's still interesting to keep an eye on them. So that's the weekly time frame. And of course, we've definitely had a bearish breakout of our HTC channel on the daily. And through the course of last week, there was a very nice retracement back towards that resistance level before it rolled over again on Friday, giving us a bearish impulse candle. So the fact that we're not really looking to use this as an execution time frame is a bit of a shame, I suppose, because that would have been otherwise a perfect setup, probably with an ATR stop, but nevertheless a setup for a daily impulse. But our selection time frame not being suitable, we've left that. However, as of today, as of first thing this morning, if you're trading the indices on the lower time frames, you would have been looking for a bearish H4 impulse. And the current hour may well be giving that to you. So keep an eye out on this. When this 4-hour candle closes, if it closes as a bearish impulse candle, that would be a valid setup for a bearish H4 impulse here on the Dow. But let's go and have a look. First of all, the S&P 500, where you can see it's even more bearish. Again, on the weekly, though, still not giving us that breakout, but a similar picture here on daily. And once again, that's certainly valid as a selection time frame for H4 impulse. And obviously, this ticks all of the boxes. Valid class 1 M pattern, outside C close, outside of our HTC channel. So all of those boxes are ticked. And here you can see again, we're potentially getting a perfect setup to go short here on S&P. And again, a bit more aggressive, as you can see, than the Dow. But finally, my favorite is the Nasdaq. And you can see that on Friday, we did get our outside close, a bearish breakout on the weekly time frame, which means that here on the daily this morning, you could well have shorted this and should have shorted this if you are trading the daily impulse. You may well have used an ATR stop on this, because I think it's a bit too long using our rules. So it would have been something like that at the end of the day. And if you're using standard targeting, something like that. So if that's you, then perfect. Absolutely, no question about it. And obviously also the same things apply regarding our potential setup for this in terms of a H4 impulse. We didn't take a hybrid here, partially because it was late on Friday, and also partly because that final candle over there really was a bit too extended for us, but we did have all of the other conditions being met for a bearish hybrid, I beg your pardon, on H4, but obviously also looking at a class 3 M pattern. Okay, so that aside, though, there's a valid setup here as well, similar to the S&P, to short this. All right, so those are our indices. Here's oil going sideways in the weekly time frame. Last week's candle ringing that high. So we are in a pretty symmetrical triangle over here. So here on the daily time frame, you can see nothing really of interest to us at all. So not touching oil still. Bitcoin, likewise, not really anything happening here. That's the weekly time frame. Daily, it's just bouncing along on this support level. So it is overall bearish, of course, but I mean, this is a class 2 M pattern. And Friday did, I think, maybe just close outside of that. So if you're really keen to trade a crypto, then you could use this as a selection time frame, but it really is borderline. And had you done that, you might well be looking to get into a short at the end of this candle, in fact, with this being a setup in all other respects as far as an H4 impulse is concerned. So that would be fine. And then finally, we've got, at long last, on the weekly time frame, on our US Treasury chart, we've had a phase 2 or retracement wave through the course of last week. It doesn't look very convincing, as at the end of last week, with it being really a significant inverted hammer or high test candle. So looking at that on the daily time frame, really it's just these 5 candles here, 2 bullish and 3 bearish. Not much doing. It's still a bearish trend overall. So from a technical perspective, if you're looking at this on a if you're doing multi-time frame technical analysis, the bearish trend on the weekly time frame, or bearish impulse wave, I beg your pardon, on the weekly time frame, let's have a look at it, is in fact still intact. So the fact that that low was ringed would be superseded by the fact that that cyclicity that gave us that is in fact still intact. So we've got a bearish class 2 M pattern. So that trend's still intact, and technically therefore the impulse wave on weekly is still intact. So if that's all good for you, you'd notice, of course, that I think we've already spoken about this. Yeah. So other take profit targets were hit. We didn't have anything else really through the course of last week. If you were looking to trade this on a daily impulse, then absolutely, I guess you would have actually shorted this first thing this morning, and maybe even gotten in on Friday. So depending. I haven't taken another trade on this. We've done exceptionally well out of this instrument, but it's really just a bit too borderline in terms of the conditions that we're looking for. So I haven't taken anything again on that one as yet. But if we do see some momentum picking up here, I may well be looking to trade this on the lower time frame as well. All right, folks, so that's it across all of the instruments that we were going to do our analysis on. Again, if you want to make sure that you don't miss out on our workshop that we will be announcing in order to teach you our new intraday lower time frame strategy, then please make sure that you are subscribed to the channel and that you hit that notifications bell. Apart from that, folks, I hope this week is going to be just as successful and easy trading as last week. But remember, don't assume that it will be, and keep those stops tight and let your profits look after themselves. Folks, look forward to chatting to you all soon. Bye for now.